All right, it is 6 o'clock, and as promised, I decided to go live today to do a home buying series. I am working both my Instagram and my Facebook at the same time, so do give me some time to adjust. I'm looking at both cameras, so I wanted to be able to. I just decided today to randomly go live, so I'm going to give everybody a couple of minutes to join in. Again, this is Mortgage Crush Mondays. We are doing away with the MCMs, the Mill Crush Monday. We're going to rebrand today Mortgage Crush Mondays, and my goal is to help everyone just give yourself the greatest Christmas gift that you can. And that's if you're in between the age of 25 and 40. To me, that's buying yourself and giving yourself the gift of a home and becoming a homeowner. I'm sorry, Instagram, the phone is shaking on the stand that it's on. So again, today is Mortgage Crush Mondays, and I'm going to give everybody a couple of minutes to jump on, tell a friend, tell somebody. If you already own a home and this would be useful, not to you, but this would be useful to someone else, then go ahead and pass this information on. We want everybody to enjoy just their right to own a home and to not continue to pay rent and to waste literally millions of dollars in rent over a lifetime. So again, if you already own a home, send this information to your friends. Daniel Pete is on the line with us. He is my trusted mortgage partner. He's with Apex Mortgage, and so he's on the line to help with any questions that you all have. Hey Al, if you're in Maryland, I sure can. We definitely can. Go out and talk about this. You need to be able to get yourself a home too. So we can definitely talk about it over drinks. So hi Myra, hi friend, and hey Tasha down in North Carolina. And so again, hi Amy, how are you? Over on the Instagram side. And so again, I just wanted to be able to live stream both on this Mortgage Crush Monday, and just talk about home ownership. Hey, hi, both of you all. And so today, when we look at home ownership and you think about who's buying a home and the trends of home ownership, it's millennials. 35% of people that are buying a home today, 35%. Hey, Belina. Hey, Charles. Hey, Talea. I think that's Sunflower Lay is Talea. So, hey, Talea. So 35% of the market right now, people who are buying homes, are millennials, and that says a lot. It speaks to the buying power of people in 35 and under, between the ages of 25 to 35, to say that there's an increase in our financial positions, right, to allow us to be able to buy a home. One of the key things you need to buy a home is 2 years of work history. Okay, and that's very important to know. And it doesn't mean the same job or at the same employer. 2 years of work history means 2 years in the same industry. And a lot of times that's confused. Millennials, we're known, actually, if you're 40 or under, we are known to what? To job hop, right? Hey, Taquan. Hi, Kevin. How you guys doing? So we're known to jump jobs and go from one employer to another, right? Where the generation is known not to have any loyalty to our employers, but we know it's because they don't have loyalty to us either, right? So for us, to be able to buy a home, all you need to have is 2 years of work history in the same industry. It doesn't mean at the same company. It just means if you're a nurse, that you are a nurse for 2 years consistently. It doesn't matter which hospital, which doctor you work for. If you drive trucks, that you've been a truck driver for at least 2 years. So does that make sense? That you have 2 years in the same industry, not necessarily with the same company. And that again is can be misconstrued, kind of confusing when you hear, have you been employed for 2 years? If you see that on an application, again, they don't mean the same employer. Something else that's a requirement, to buy a home is if you're self-employed. So 2 years as a W-2 employee, it's pretty cut and dry. You make what you make, right? If it's some overtime there over 2 years, the loan officer would kind of average that out. But we have some self-employed people, or a lot of self-employed people, because we are the generation of what? Being self-employed. We don't traditionally want to work full-time or work the traditional 9 to 5. So we have different business ventures, or we become self-employed and go into business for ourselves. So with that, if you are self-employed, again, you need 2 years, right, of tax returns, W-2s. You need 2 years. But what you must be mindful of is all your write-offs. Okay. And I am famous for, let me tell you, being a realtor and also been doing direct sales for residential and commercial services. I love to write off. I can write off mileage. I can write off the electricity that's powering my home right now. Why? Because I have both home-based businesses or teleworking businesses. I don't have to have a traditional office to be a realtor, right? So in that case, when you write off uniforms or cell phones or all the things that we use, I can keep using a truck driver because I was on the line and knowing, as a truck driver, he can write off his work phone, right? Or write off clothes as a uniform. When you write off when you write off the items, your work expenses, you also have to be careful, mindful, not to write off so much that you actually make it look as if you have a loss or that you don't bring in a lot of profit. So for an example, I can use whole numbers. If you made $100,000 self-employed, but then you end up writing off, $50,000, to qualify you for a loan, they can only use that $50,000. They can't use the other the other $50,000, because you said that is what you use to operate or to run the business. Okay. So if any of the self-employed people that are online with this, be mindful of those write-offs, because that income can't be used as an expense and also towards your ability or your power to pay your monthly mortgage. Okay. So just be careful and mindful of those write-offs. I'm gonna have someone I'm working with now. I told her, bite the bullet. Bite the bullet for your tax return for this upcoming year. Don't write off anything really to make up for last year and to be able to exactly. LaShawna Middleton is on the line. She is a broker down in the North Carolina marketplace. So Tasha, that's LaShawna. She's actually in your area. And so, you have to literally bite the bullet is what I told her, but you have to give up being able to write off all the tax write-offs and not paying taxes, just to be able to have your buying power and your dollar so you can buy the home that you want to buy. Okay. So again, if you're self-employed, just double check, align your tax write-offs with your goal. So if you want to buy a home, do not go crazy writing off any and everything. Okay. Make sure that it's an absolute need for you to write it off, because you don't want to diminish your buying power unintentionally, because I know it's not your intent, right? But we just don't want to pay as much in taxes when you're self-employed. Something else that's really big with buying a home, which a lot of us may not even think about, it is our tax return, our bank statements. So banks, they require that you give them 2 months of your bank statements. Now, why is this? Okay. They want to ensure that you don't have something called NSFs, right? That you don't have a history of non-sufficient funds. I had a funny today. I had a client I'm working with. I asked her to send over her bank statements to Mr. Daniel Pete with Apex Mortgage. And I asked her, do you have any NSFs? Have you had any NSFs this year? And she said, NSF, what is that? We were communicating via email. And I said, well, that's good. You don't know what NSFs are. It means you don't have any, right? So NSFs are overdrafts, those bank overdrafts, when they hit you with the $35 fee because something for $5 came through, you didn't have enough money in there to cover it. You want to ensure that you monitor the NSF activities, the non-sufficient fund activities that occur on your bank statement over a 12-month period. Banks, if you do not know, they track your history for the entire calendar year. So although it can be, say September, you didn't have any, and maybe even for August, when the loan officer asks for the past 2 months of your bank statements, what they may see at the very end of your bank statement is that for the month you had zero, but actually for the year, maybe you had $2,000, right? I'll use a high number, or maybe you had 10. You know, what that does is that too, because they can track it, the underwriter can look at it and see it speaks negatively to your ability to pay your bills on time and to manage your money. See, home ownership, or the approval to get the approval process, should say, is all about, is this woman or man capable of making the monthly mortgage payment on time every month for the next 30 years? Okay, that's a long commitment. That's probably one of the longest commitments you'll ever make outside of being a parent, right? Or being a spouse. So voluntary, I should say. So outside of being a spouse, it's saying, can you make, or will you manage your money well? Will you make your monthly payments on time over the next 30 years? So something as small as, if it's, you know, think about it, Christmas is coming up, right? So what will we do for Christmas? We spend, we buy gifts, we buy presents, we go out to eat, we buy food for dinners. You spend a lot of money during the holiday time, but then you pay for it, right? When it's bill time the following week, when it's January and it's time to pay your rent and time to pay your car note and your insurance and all your other recurring bills. Okay. So again, being mindful of the activity that happens on your account and knowing that that's monitored over a 12-month history. And at the bottom of your statement, if you guys go online right now and download a copy of your statement from last month with your bank, on the very last page, it will tell you year-to-date non-sufficient funds. And that can absolutely hinder you from getting a loan. I'll tell you a quick story. I had a client, Mr. Daniel Pete and I with Apex Mortgage. We had a client, and due to the non-sufficient fund, the NSF that this person had, although they had a credit score that was over a 620, right? So they had a pretty good credit score. Although they had money to close, right? They had money they had gotten from a state program. They did not have, they had insufficient funds, quite a few over the past 9 months. And because of that, that was really the primary reason they could not get approved for a loan. So you don't want, you know, swiping your card at Chipotle, right? Or some miscellaneous charge to be the reason why you can't make one of the most important purchases at this point in your life, right? So be mindful of your spending habits for the holidays. Do not get yourself in a situation where you overdrafting your accounts. Okay. And you guys are probably like, why is she spending so much time talking about non-sufficient funds? It's because I literally just saw a deal and the dream go away from a young, 25-year-old young woman who had the money, who had the credit score, but because she did not have good spending habits, right? Lost her chance of buying a home. It was a horrible situation, right? So be mindful of your overdrafts and be mindful of just your spending habits and not get into the spiral that's going to come around because it's Christmas time. And what I would like to say, you know, one of the best gifts that you can give yourself for the holiday season is a new home. You know, the average cost of rent is what? $1,500. Somebody that's paying rent, tell me how much you're paying. If you're in the Prince George's County area, the Baltimore area is a little bit less expensive, but the average price of rent is about $1,500 to $1,700 if you're in the Prince George's County and higher in the DC area. I mean, you're talking over $2,000 a month for a 2 or 3 bedroom apartment, right? So for a 2-bedroom apartment, if you're paying $1,500 to $1,700, you can get into a home and literally pay a mortgage for equal or a less than amount. And I'll say it again. You can own a home for less than it costs to pay your rent month after month. Okay, a $1,700 mortgage. When I first bought my first home, I'll give you an actual story. When I first bought my first home, it was $180,000. It was in the community of Malton in Upper Marlboro, for everybody that's from Prince George's County. And I was able to pay a mortgage every single month for a little under $1,200. The taxes were relatively inexpensive, under $3,000. And my mortgage was $1,200 a month. I owned a 2-level 3-bedroom, 2.5 bath home for $1,200 a month. You can't beat that for a mortgage. Hey, Rodney. Hey, John. Hey, Damien. Hey, Elizabeth. I see all the people who joined in. Hey, Auntie. My aunt's on the line. Hey, Rob. Thanks for joining in. This is Mortgage Crush Monday. We're doing away with the Mail Crush Monday, and we're rebranding this as Mortgage Crush Monday. And I'm just giving you all some tips on home buying. And the point that I was just talking about is, again, the average price of rent in the Prince George's County area being between $1,500 and $1,700 for a 2-bedroom apartment, right? And for me, when I purchased my first home, my house cost $180,000, and my mortgage was just about $1,200 a month for a 2-level, 3-bedroom, 2.5 bath home. Right? My first home, $1,200. Well, guess what? My apartment rent for a 2-bedroom apartment was $1,115. So I paid really pretty much the same thing. I got more house, more space, right, for just a little bit more money. So what does that tell you? It tells you that you should own. You shouldn't rent. That the money that you're throwing away and renting is really just hindering you. And over a 6-year period, I was able to sell my home, and I was able to get $45,000. That's how much equity I had gained in my home in just 6 years. Okay, 6 years. I bought the home in 2009, sold it in 2015. I walked away with $45,000 in equity, $45,000 in cash. I had more equity because I gave a little bit of closing assistance, and I had to pay the commission for the agents. But I pocketed $45,000 from a 6-year investment. So you have to get to a place where your money's working for you. I don't care what you're doing. You have to be able to invest your money. And a great way to invest it is to buy a home. Why? Because you get to live in it, right? And you're budgeted to pay for your roofing and your cost of living anyway. So why not put that money that you already have to spend into your mortgage and allow that money to gain a return? And that's equity, okay? And I wanted to just break down, a couple more things. There's some great programs out and available right now. Again, Daniel Pete with Apex Mortgage, he's on our live conference. I'm on the Facebook side. He's on with us. He has phenomenal programs. His ability to work with buyers. I mean, he can work with you with different credit scores. We have a client right now. I sent him a file today, and the credit score, literally was under 500. And he's like, no, but let me look at these other factors and tell you that we can do what's needed to get this person to the credit score that they need, above a 560, so that we can approve them for a loan. See, there are not many loan officers out here who will walk you through every step of the way. They look at your credit, and whether you're right, if you're ready, then they'll tell you, okay, great. If you're not ready, they'll not return your call. Daniel Pete is not that. He's completely the opposite. He is all for helping people get to where they need to be so that they can purchase a home. So you don't have to come to him ready today. You can reach out to him. You can inbox him your number, or message him to give you a call, to reach out to you, and he will. You do not have to be credit ready today for Daniel Pete to help you and get you to where you need to be so that you can buy a home. I'm not big with a lot of the other or third-party credit repair programs because I feel they don't have a check to give you. But the loan processor, loan mortgage company, they have a check to give you. So allow them to do a free mortgage loan analysis to really just show you exactly where you are, what you need to be. If you're self-employed and again, you're unsure about what you've done historically and you want to do different for this upcoming tax year so that you can have the buying power that you truly honestly can't afford, allow Daniel Pete, just reach out to him, send him your tax return, to answer and go through all those financial questions so he can know about, how much mortgage you can afford every month, right? Where you are currently, how much you can afford. and what you'll need to do on your tax return. Again, this is for the self-employed people that are on the line with us, okay? Allow him to be able to look and tell you exactly what you need to do tax-wise this year to allow you to be able to purchase a home next year after you file, okay? So again, if you already own a home and you want to buy, maybe you want to upgrade, this is a great time to be able to list and sell. What I'm going to do next week is a series on giving you some tips to be able to increase the value of your home for cheap. Some low price upgrades that will actually bring a high return on your home. And if you may have family or someone who owns a home, please, you can have them to be able to join us next week. I just want to help people be able to get out of the cycle of renting, be able to leave something to your children and to your children's children. You can't leave an apartment. You just can't leave your kids an apartment. We want to be able to own the communities that we live in. We want to be able to own, Prince George's County and Washington, D.C. and Baltimore, everywhere that we are. We want to be able to be true citizens and have ownership so that we are able to be decision makers and have influence and have a voice in the communities that we reside in. And that's only achieved, honestly, through owning a home, through home ownership, right? Because you care about what happens in your community. What happens in your community actually drives the equity and the value of your home. So it makes you more active in your community. So that's my goal. And so we'll do this on Mondays. Again, this will become Mortgage Crush Monday. And we're no longer crushing on just males. We want our males to own homes and to pay mortgages. And we want our women to be attracted to our males that own homes. And so women, grab your men, get them on. And let's get everybody on. Daniel Pete, Mr. Pete, he's posting. It costs nothing to find out where your potential buying status is. Absolutely nothing to find out where your potential buying status is. This is a free service to you to help position you to buy a home. Again, Daniel Pete with Apex Mortgage. The help is here. The only step that's required is one on your end to reach out to him. And I can send you his information. I'm on the Instagram side. But the help is here. If you want to buy a home, if you want to list and sell your home and buy a new home, the help is here. And again, it costs absolutely nothing to find out what your home buyer status is. I want to open it up. Does anyone have any questions for me? Each week, again, I'll go over and cover a couple of different topics. There's so much in home buying that you can't go over everything in one session. But LaShawna Middleton, our broker from in the North Carolina marketplace, she's commenting and weighing in. I appreciate her for being here today. Her wisdom and guidance has helped me since I became licensed. And what she posts on the Instagram side is that once you allow the lender to assess your situation, you now have direction. So he can really just show you where you need to go. You have a map to say, this is where I want to go. We can make you a 6-month plan. We can make you a 12-month plan. We can make you a 3-month plan. The point is, you don't know unless you allow a mortgage company to actually access your credit and give you an assessment. Okay. And I'm sorry, she's in Atlanta, the Atlanta marketplace. I said North Carolina a couple of times, but she's in the Atlanta marketplace. Sorry, Tasha, she is not in North Carolina. She is in Atlanta, Georgia. So I'll have to find you somebody, Tasha, in North Carolina. Hi, Tiana. Thank you for joining us. And so if I'll open it up, are there any questions that anyone has about home buying? We have a broker on the line, LaShawna Middleton, in the Atlanta marketplace. We have loan processor Daniel Pete with Apex Mortgage on the line, and you have myself, Lois Slater. I'm your licensed realtor in the DMV. Any questions that you guys have, again, Daniel Pete is available to give you a free analysis of your credit. Free. Did you guys hear me? Free. This is not a third party, pay for let me repair your credit thing. This is free. So if you just want to know where you are, and more importantly, what you need to do, you may feel like you already know what you are, right? If there's some bills you haven't paid or some lates or something you've had, you may know that you already had those lates, and that's okay. allow Daniel Pete to give you an assessment to tell you what's needed to get you to where you need to be so that you can be pre-approved for a mortgage. Again, there's not just one underlying factor. There are many factors that go into getting you approved, in addition to your credit score, in addition to just, maybe you've had a late payment or so here or there. Daniel is absolutely phenomenal. I mean, he has alternative ways of getting you approved with alternative credit. So, give yourselves a chance to get pre-approved. Hey, Gil, Brianna, congratulations. Thanks for joining us. Again, give yourself a chance to get pre-approved. Daniel P. to Apex Mortgage. He's in the thread. You guys can go back, send me your information for your free credit assessment, and just free roadmap to buying. Let's change what the new year looks like. Let's go into 2019, not just being a renter, but truly owning a home, truly being a part of our community. So if there are there any questions? All right, I hope that means that I've given you a lot of helpful information, and we'll be back here again next Monday for our Mortgage Crush Mondays. Have a good evening.